After 7 months, Express Scripts and Walgreens have finally come to terms on a PBM contract. This is obviously a good thing for Walgreens and Express Scripts, but what does it mean for CVS?
Well, I actually think it's better for Express Scripts than it is for Walgreens. I think Walgreens had to pay a song to get this deal done. They totally miscalculated how negatively they would be impacted from not having a combination with Express Scripts. And if you look at their comps since January, I mean, abysmal. So they were really kind of desperate at this point. So I think the real winner there is the Express Scripts, just because they also have the Medco acquisition synergies, and now they have this the agreement. That said, I do think that CVS also is a winner, because I don't think that you're going to see volumes move quickly back over to Walgreens. It's very hard to actually change a prescription, and it's one of the hardest things that a pharmacist will have to do. So I think that you'll see more loyalty towards CVS than expected or than feared, and that's what the market's telling you, that they're going to lose the market share gains they just got, and I don't think that that's the case.
Right, and as far as from an integrated PBM perspective, has this changed CVS's positioning at all?
Oh no, not at all. And actually, that's a very good point, Lindsay, because I think with this whole situation, when this whole thing happened, all of the players were trying to figure out how to deal with it and what did it actually mean. And they focused more on more narrow networks and going to more integrated plans. And so this played right into the hands of CVS because they have the retail pharmacy and they have the PBM. And again, that's one of the reasons why they've also gained market share. So I don't think that goes away. I think that is important. And again, CVS has done a very good job getting the volumes in-house, taking the market share for a good reason. They have a good product and they have good services, and that's what they've worked very hard at over the last couple of years, actually. So I do think that the sell-off today is a buying opportunity. We have been buying it. It's a very large position for us now. I love the fact that it has no Europe exposure. It's 100% domestic. I love the fact that they've got $5 billion in free cash flow that they're going to generate this year and next year. They're going to be buying back stock. They're going to be raising the dividend, and I think that their business underlying will stay pretty okay.
As far as Walgreens concerned, you don't see this as a catalyst for the stock? It's still pretty cheap today, even today, up 12%, 13%.
I just think that they have a lot of problems. I think their profitability is going to be very much at risk, because I think they had to go to Express Scripts and really cave, if you will, because their comps were so horrible, because they were losing market share so quickly. The other thing about Walgreens is they just did this massive UK acquisition. They overpaid dramatically, and sure, it may be accretive to earnings, but it's going to hurt their ROIC substantially. And I think more than that, it's kind of an integration risk. So now you've got all these pieces moving in, and I'm not sure that they have the strongest management to get it done. So, I'm not saying that's a bad management. They have historically done very well for their shareholders, but I just think the near term, there are still more risks to the story, and the stock is up a lot in a day. So if I'm owning of Walgreens, I'm selling it, and I'm definitely taking the advantage of the 4% drop in CVS to be buying it.